all excited to know more about stock market. For today's video we were going to tackle about a book review about stock market.
This book review is all about Coffee Can Investing by Saurabh Mukherjea. These are the key takeaway from this book. Best-selling author of Gurus of Chaos and The Unusual Billionaires, Saurabh Mukherjea, puts his money where his mouth is. Saurabh follows the Coffee Can approach high-quality, low-risk investing. His firm, Ambit Capital, is one of the largest wealth managers in India, supporting this approach and delivering spectacular returns. In Coffee Can Investing, Saurabh will show you how to go about low-risk investments that generate significant returns. The book does its best to scare you away from investing in gold and real estate. Then they introduce you to traits like patience and perseverance. They shamelessly plug their parent company everywhere. Finally, the financial advisor conveniently arrives as they are 10 years away from their doom and saves the day with a Coffee Can portfolio. Do not look at the stock market as a money-spinning tool. Buy good quality stocks and hold them for a minimum of 10 years. Invest in direct mutual funds. SEBI is constantly working to protect investors. In mutual funds, always pick a growth option. Don't churn your portfolio regularly, as the brokerage and other charges hurt your portfolio. The commission you pay to mutual fund brokers via non-direct funds also compounds. If you are investing $10,000 per month, after 25 years difference between direct and non-direct can be up to 10 to 20 lakhs. Mutual fund houses purposefully make it difficult for you to buy direct funds from them. Instead of investing in a large cap fund, invest in index funds. Indians are pretty sheep-like when it comes to investing among many other things, as they tend to invest heavily in real estate and gold generally due to social pressure and mimetic rivalry. The book does give a decent picture of why it's not a prudent path and offers more profitable alternatives. Although it is a piece of common sense advice to the rest of the world, it is considered contrarian advice in India. Given the ubiquitously misinformed, ethically challenged, and poorly accounted Indian market, the book does a decent job of providing a big picture. The frustrating part is that the book dumbs down all of the concepts. It assumes you don't know, don't jack about anything, and oversimplify things since the target audience is the average Indian who has never invested or considered the possibility of investing in equity, and is positively unlikely to invest in anything other than gold and housing. One cannot complain about this approach. It's recommended only for Indians who have never invested in financial instruments other than gold and housing. Having a concentrated portfolio of high-quality, high-growth businesses and staying invested for an extended period is powerful. There are also some interesting thoughts about how to go about thinking about your personal finance. Having a concentrated portfolio of high-quality, high-growth businesses and staying invested for an extended period is powerful. There are also some interesting thoughts about how to go about thinking about your personal finance. In the olden days, cash saved would be put into a coffee can, never to be touched unless there was an emergency. If one can allow high-quality investments to marinate over more extended periods, the results can be astonishing. Invest in good companies and hold for a long. This book defines a good company as one that has consistently grown top line by 10%, with a ROCE of 15%. The probability of positive return increases with an increase in the holding period to almost 100% at a 10-year holding period. Be wary of mutual fund costs and evaluate returns net of expenses. Invest in short-term debt rather than long-term debt. A trader genuinely believes that he makes money by actively participating in the market and that too often as possible, even if he is told that the broker makes all the gains, almost always in the bargain. The Coffee Can portfolio is for the passive investor. Investments in stocks without a built-in element of speculation are like the concept of capitalism without bankruptcy.
That's all. Thank you for watching. I hope you learned many new things about the stock market. Kindly subscribe to our channel and click the notification bell. Also, follow our Facebook page to learn more about the stock market.